Hi guys, it's Stacey here from tycoonfactory.com and forexcellence.trade, and I'm just making a very quick tutorial video today on the Fibonacci tool for MetaTrader 4. Now, Fibonacci Tool is a fantastic technical analysis piece. It is available as standard on most platforms. I use MetaTrader 4 and I also use TradingView sometimes for analysis as well, and it's available on both of those platforms. And when you come to MetaTrader, it is just this symbol here with the dashed lines and the little F at the bottom. If you don't see it within this toolbar, all you do is to come up to the menu here, right click and just select the Customize option, and then you can see it allows you to insert or remove whichever tools that you like into this menu here, so you can just add it there. So Fibonacci it's very interesting because what it is it's a set of principles based around numbers that kind of govern the laws of the universe, and these numbers are seen within nature, they're seen within mathematics. The Fibonacci sequence doesn't just apply to trading. So somebody came along and took those concepts and put them into a tool for technical analysis, and it's frightening how many times these levels are spot on. And the theory behind it is that with fibs you can work out where price is going to turn around and then hopefully where it's going to go to as well. Now, as with any trading method, it's not 100% accurate. Sometimes the levels aren't to the pip, sometimes they are. It does happen a lot. Sometimes you'll see that price starts to turn around before it actually gets there. So I'm just going to give you an example of how to draw the fib retracement tool on your chart here. So I'm going to assume that we were trading within here and none of this had happened. So basically, if I was in this move and I could see that price had started to kind of come away from here and started to retrace back up, I would simply draw the Fibonacci tool from the top of the wick, so the top of the move, down to the bottom of the move there. And what that does is draw on these retracement lines here. And what you can see is that price came up and it just wicked up, not quite to the 61.8, which is this level here, before it started to continue down. Now, the 61.8 level is very, very powerful within Fibonacci, and you'll see time and time again whenever you draw this onto your charts, especially on the higher time frames, you'll see it's scarily accurate. It is not unusual for it to hit that level to the pip. However, what we would generally say is anywhere between the 50% and then the kind of 78% mark, that is sort of a turnaround zone. So it's not uncommon for it to turn around anywhere in that, but quite a lot of the time you will see it hit the level to the pip. So if you want to change the levels within your Fibonacci tool to include some of the more popular ones, what you can do is just right click on your chart and select the objects list. That is going to come up with your Fibbo here. You can then select it and just click the edit button over here. And as you can see, you've got some options here. So you can just come over to Fibbo levels, and this is going to allow you to put in the Fibbo levels that you want. Now, I don't use all of these, so you can kind of select the ones that are going to apply best to you. But I personally would be deleting that one, deleting the 38.2. I don't use that. I don't use the 50 really. I do use the 61.8. I do use the 100. And I'll take out these ones as well, just because I'm not looking at those. I would want to add in the minus 27, and I'll explain why in a moment. So you just would type that with minus and then 0.27, and you can put your description in there as minus 0.27, the same. I also do like to add in a couple more. So I really like the 0.78. And the 0.72 I'll sometimes add in there as well. So I'm just going to show you what that looks like. This is how I usually have my fib set up, and what you can see is that I would usually expect my turnaround zone to be somewhere around the 61.8 to the 78. That being said, it can turn around any time beyond the 50. It's not unusual. Sometimes if it's a very fast moving market or there's news involved, it won't even get that far. But what I would say is that it's worth having those levels on there. The 50 is quite useful. You could leave that on there as well. And then if I was using a turnaround zone of, say, the 61.8, I may use the 0.78 as my stop loss, and my target will be the 0.27. So you can see that is exactly what happened. price came up and it almost hit the 61.8, so it was in the reversal zone, and then it came back down, and you can see it went past the 0.27 target. So you can see how that worked out there. So if we have a look at that on a different chart, so I'll get up a completely separate chart or something like UJ. So I'm just going to use this example here. So let's say we were in this move, and you can see that price came up to there. What happened was it then retraced. Again, it got past the 50 zone, which I haven't got the 50 written on there, but you can see it got past the 50 zone, and the wick didn't quite make the 61.8 before it came up and hit the profit target of the 0.27 again. So you can start and play around with the levels that's going to work best for you. The idea behind this tutorial today was to give you an introduction to the Fibonacci tool, give you a little bit of an idea of what it's about and the levels you should really be looking for. So I like to use the minus 0.27, apologies, as the profit target if I'm using Fibonacci. The 61.8 is my favorite level, but I would have everything on there from the 51 to the 0.78, because that is going to really get you a nice reversal zone. So it could start and reverse at any of those levels. 61.8 obviously is quite central, and quite often it will make it to that level as well, and it's worth just going on some charts, trading for you, MetaTrader 4, whichever you like, having a play around with what's going to work best for you, what levels you like, what time frames you like. So it's a really useful little tool. Now, I wouldn't necessarily use it by itself, but combined with other technical analysis such as price action, or whether you're using more indicators, it is really just a great way to just add extra confluence and extra confidence in your own trade. So this is something that I think is very, very useful whether you're trading indices, Forex, stocks. It's a really, really useful piece of kit, and the fact that it comes on most trading platforms free of charge is very, very useful as well. So I hope that that's been helpful. Any questions, just ask, and I'll see you in another video. Don't forget to subscribe and follow along with my trading challenge also.